Right. I mean, the real question for me is, which model are you talking about? The 81 model, which was premised on tax breaks and tax incentives for various kinds of investments, sort of a pre-Gorbachev Soviet-style way to run the economy, or is it the 86 style, the 86 model, which is premised on trying to treat things more alike, get the government out of allocating investment? You've got two models there, one of which didn't produce very well in the first half of the 80s. We had low business investment growth, one of which, at least until the current recession, was doing very well at producing business investment. It could be coincidence. Well, but they are two models, and you have to make up your mind, because I'm in favor of one and I hate the other.
Can I comment on this? I think here the data, I'm prepared to argue that 83, 84, 85, and 86 were solid economic performance years. But when you take it as you are doing from 81 to 86, yes, you're right, because the data is pulled down by the 81-82 recession. But Art's point, and I think it's a valid point, I think Dick made it too, is after the tax laws were passed, yes, we suffered recession for another year, but that recovery was a lot stronger. In fact, the early stages of that recovery were a whole lot stronger than almost anybody in town predicted. I'm not as happy with the 86 tax bill as you are. My judgment is one of the reasons the economy has faltered before the Persian Gulf invasion and so forth was tax changes which moved away from entrepreneurship and capital formation, namely the shift in depreciation and the shift in capital gains taxes. Now, you and I are going to disagree on this a lot, but I want to make that point. The economy performed pretty good in 87 and early 88, but I think it was easy money. And when the effects of easy money wore off, George Bush effectively has been left now with an economy that hasn't grown for 2 years. And I think part of the reason is mistakes made in the 86 tax bill.
I want to horn in here. I'll get the rest of you all in just a sec. And ask Bob McIntyre a question, because it's a part of the argument that he and others have made about the income disparity that is widened between the rich and the poor. What is wrong with the rich getting richer if they pay substantially more in taxes? Doesn't that reduce the tax burden on middle and lower income people, making it lower than it otherwise would have been?
Well, no. I mean, what happened in the 80s, and it's well documented, is that incomes more than doubled for the richest people in real terms. They stagnated for most everybody else. Meanwhile, taxes went the other way. So the tax rate on the richest went way down. Taxes went up on most families.
No, I'm talking
so most families are paying more out of less. So you can't say that tax cuts for the rich help the middle class. The middle class has lower income, it has higher taxes, and, by the way, gets less in government services.
Dr. Ruhn?
Well, first of all, that's not true, and you don't know how much the wealthy got in terms of increased income in the 1980s. The only thing you know is about taxable income, because those are the only statistics we collect. Yes, we had a shift out of a lot of non-tax sources by the wealthy in the 1980s into taxable income. So we know their taxable income grew very rapidly. We have no knowledge about what their total income growth was, and it may not have been any greater than that of the middle class. I don't know. You don't know either.
Well,
because we don't have the data.
Incorrect, because the way the data comes in...
You get it from income tax data.
Right, which that means that if somebody's sheltering their income with a tax shelter, that's on the form.
No, you do not report many forms of income on your tax form. And you only report
well, you're right.
That
For instance, you don't report income that you cheat on. But no one thinks that the Reagan era made the rich have higher moral caliber.
No, there's not totals of much of your income if it is not taxable income on your IRS form.
Well, what are you talking about? Municipal bonds or something?
Well, you've got all kinds of things that are held overseas. There's much of income. Of course, municipal bonds. We know there was a shift out of municipal bonds.
Minor.
There are many types of tax shelters you can get in, which are totally legal, or were totally legal, which were not recorded.
This just suggests that the income of the wealthy was even higher than we think, because all the income of average people is reported. It's labor income, and it's reported, and it's reported.
Oh, yes, all income is higher. But
I mean, real income
is a remarkable one.
Real income increased by a third.
That's the whole point, Rob.
In 8 years, real income in this country increased by a third.
Yeah, but it was all concentrated at the upper end.
Well, that is just not proven by the data.
That's
But
not
the
true.
fact is that
Wait a minute, what you're trying
according
to
to the
say is
data,
the rich got less honest and the poor got more honest, or have I got this backwards? Either one seems silly.
I don't know about the relative honesty rates.
But
That's one data I
the data is very clear that for
I've seen
three-fifths
some-
of the population,
You
incomes
reduce the
went down.
penalty for being honest, so has more people willing to report.
But I mean,
But that's
according to
true,
the-
that-
but according
that
to
it's
the-
worse than we think.
What should have been done differently in the 1981 tax cut, looking back now, 10 years later, and over here, and I'll start with you, Bob McIntyre, what do you believe should have been enacted in 1981?
Well, it was very clear that year that there had to be a tax bill, number one. Taxes were already being pushed up by inflation, and there had to be some adjustment for that. If they had, in fact, done that and adjusted people's taxes for inflation so that there was a true across-the-board tax change, that would have kept things roughly where they were. We wouldn't have had the great deficits of the 1980s. Our children wouldn't be burdened with this enormous debt like they are now, and we'd all be better off.
I'd like to ask for the supply-siders first, and then for all the panelists, why did the economy run out of gas this year? And for all the panelists, what do we do now to re-stimulate the economy and have the kind of growth we did in the 80s?
Bob McIntyre?
Well, I think people have spoken at great length. I was amused by a couple of the reasons. I heard earlier today that the 81 tax bill didn't take real effect in the economy until years after its enactment. We should have adopted it in California, where it would have been retroactive in its impact, as the California tax increase apparently was. I also heard that our problem these days and what caused the deficit may be that we just have stopped throwing empty office buildings at the Japanese as part of our competitive policy, and because of the 86 tax reforms, I'm not sure that's our problem either. I thought it was good to stop throwing empty office buildings. But the one thing you can see now is that the budget deficit and the size of it and it's the way it just looms over everything has left us without much room to maneuver. The government can't enact the fiscal stimulus. It can't even talk about doing long-run things like improving education or rebuilding the roads or all the other things we need. The deficit just has really got the government in a situation where it's not doing its job, which is too bad. There's a lot of things government does well, and we're not doing them. Instead, we're just paying interest on the debt. That is the legacy of the 81 Tax Act.
How do the various members of the panel now think about the capital gains tax and what might be done, as advocated by some, as an offset to that in terms of the distribution of income? Let's get to something controversial.
Yeah, a question like that would always, from the floor, would come from Hy Liebling, by the way. In case any of you know him from years back, one of the top people in this government for a long time. There should be no capital gains tax whatsoever, period. You can tax the value of assets or the yield on assets, but not both. It's double taxation. The real problem with capital gains, I think, is a lot of personal income. It goes through and is counted as capital gains. What you should do is a reform of capital gains such that it truly is the appreciation in the value of an existing asset, period. It can't be deducted against ordinary income, and when taxes come on capital gain, they should be zero. Everything, Bob, everything good out of government does not come by more spending. And every good program on taxes doesn't mean you have to be a revenue enhancer.
Anybody else want to say something on capital gains quickly, because we're just about out of time? Bob?
Well, I just wanted, I think that maybe this is a wrap-up, Fred, because we're leaving where we came in, smoking the same whatever it was that said if you cut taxes, you can pay for the defense buildup or the Social Security cut or whatever. It didn't work the last time, and let's not try it again.